Morning, it's the crypto sniper, the market sniper, and the reset sniper talking out of his market sniper hat today. How are you doing? So we're going to make it a short and punchy one. This is a key development for gold. This is a break of the 1680 that we have observed as a key level. We had this key level, and we've repeated and reiterated this level countless times. One of the key reasons was it was the point of resistance over here a number of times when we had the events of March 2020. So you could see we were resisted again, then we had a big sell-off, then we came back and we were resisted, and then eventually we finally overcame, and then we became support for a bit of a bull flag that saw the final move to the target that we had anticipated. A lot of those targets were actually better set up on the gold euro and the gold pound. Throughout that period, we went through a sustained pullback. We were actually bearish at this juncture over here when the Fed was due to make a rates announcement, and they ended up doing a 0.25, a very pithy interest rate announcement in an environment where inflation had completely got away from them. And most of the market had priced in far more. That actually led to us being incorrect, and instead of the break of that grind line that you're seeing over here, you actually saw a move up. That move died fatally on a shooting star, a deadly intra-period reversal, and this is a weekly shooting star. Very similarly at the previous legacy high of 2075. This made double top candidacy, battling with the world's words today. Can't spit him out. Anyway, made it a potential candidate for a double top, and that then turned into a breakdown that then bounced again on our ground line. In the end, we got our ground line break, and you can see how that came about over here, there, and there. So we've actually been on the bear and concerned bear side of gold since this key event. There's been a number of reasons for the double top, for the key level of significance being a key level of significance. Remember, it was the resistance that turned support, and I can show you all these multiple contexts on a lower time frame apart from the weekly, and you'll see how clear it was. Many people always want to say head and shoulders, inverted head and shoulders continuation pattern. No, there's no such thing, but it was clearly touching against a resistance level that it eventually overcame. We were supported here, and we suggested that you'll get a rally up from that, and it's typical to get a return move based up to your basing ascending grind line that's happened here. So that's the return move. Since then, you've been selling back down, and now this weekly candle is breaking that very important since 2020 level of 1680, and this opens up targets anywhere down from the 1380 to the 1260 in paper gold prices. Let's be clear, gold is money, everything else is currency. But in a deeply liquidity seeking environment where they are tightening on liquidity, increasing interest rates, and a recessional stroke depressional economic environment, all assets will be sold off for liquidity in the event of the crushing of leverage, people in caught out positions. Everything that can be sold will be sold, and that can still see you get even cheaper gold later, although I'd expect premiums to extend quite substantially, and I'd expect waiting times to extend as well when you make moves down to anywhere in the 1260, 1380 level. Let's have a look at this on a bigger time frame. By the way, this puts us contrary to quite a lot of people. I know Brent Johnson has just bought some gold at these levels. We've got a guy, Rashad Haliev, who's done an elaborate chart here as to why he thinks it's a double bottom. In fact, he is highlighting his chart draw over here. So please remember, we can always be wrong, but we disagree in all of these scenarios. And we actually think that we are going into a highly contractive state of environment. Watch out Bitcoin, watch out crypto, watch out equities, watch out many other things. A couple of other interesting points on this scenario that we are looking at, and that is, for example, silver is trading below 19, and it had a similar floor level that I will just double up for you here. Let's take that one off and just grab it nicely. That was around $22. Now, the silver floor was forced through already quite some time ago and has been making lower lows and lower highs. Many people have not noticed this. and gold stayed above this level for a sustained period, hanging on, while silver bled out. Note again the break, the rally just through, down, lower low, lower high, lower low, lower high, shooting star right now. So silver has already been bleeding out, which had already pushed the gold-silver ratio back into, hey, we need stimulus environment. We had that squeezy Japanese, and the gold-silver ratio has been working its way up. We did a draw saying, above 90, it's generally a very good accumulation in the long-term view. But I think you'll be able to get cheaper silver still to come, and cheaper gold as part of that. So we are going to, in our opinion, have another form of the March 2020 events, only the theme will be different in our opinion. So this is a highly contractionary, wow, you could have sworn I spoke English, environment. So there will be a lot of risk on assets that are getting knocked hard in this overall environment. So that's it. Gold is, in our opinion, a sell. Remember, this is a paper sell. And by the way, when you look at this, I have to highlight that this rejection over here and the selling since here is far more brutal in the momentum sense than the first rejection. So you have a first rejection on shooting star to the level. I'll just draw the level with a square. Since then, you've had that rejection. It has been one-sided and brutal. The notion of this tightening is to crash and break the system, in our opinion, and has always been that way. What we see happening is potentially a macro rising wedge before you go higher. So this dip can come in quite some way. I've just given you a sketch, by the way. This line could also be at this rake of angle and down here. But it's our opinion that you will indeed find a deeper dip coming over here during this period. So it's quite bearish, but it's bearish for short, medium term. I want to highlight that, in fact, the dollar index itself has gone up in rising wedges, where everybody assumes a rising wedge is a bearish structure. And we've also shown this to be the case. Let's go have a look more on the weekly. So here we are, we're showing you a series of going higher in rising wedges. There is a first impulse, a second impulse, a small third, which I've put in a squeeze. First impulse, second, tiny third leaning up against our squeeze. Bang, you break out. You have just a channel pullback. You don't get disorderly to the downside. You stay in range. That all becomes part of a new first impulse. You get a second impulse, potentially like that, and you're in the process of making a third. And clearly you have gone higher and higher in a series of volatility constriction, then breakout, rewind up events. So the notion that you can't go higher here for the dollar is certainly on. And in that environment, it will be damaging and highly containing of the inflationary forces, because we are actually taking liquidity out of the system. People are having shortages of money, and what of course happens there is that they sell other risk on assets to get liquid in an environment where liquidity is being extracted. And with that potential for the dollar doing such things, you can obviously get knock-on effects on the rest of the world currencies, which we've covered at a great event. I don't want to sprawl into the USD Korean won, the Japanese yen, the Euro USD, and all the many currencies that we have highlighted that will weaken against the dollar as part and parcel of a macro series of events. Okay, I'm Francis Hunt. I'm warning of a higher dollar. I'm warning of real fear coming in, and of a downside move in the gold markets, the paper gold markets. Get your fiat, have it in cash, have it ready. Watch out for banks. Make sure you aren't overexposed to them, so preferably cash is good. You'll be able to buy with premiums at a lower paper price. The gold window is going to be extended for you. Okay, thanks for watching. And remember, by the way, guys, this our community is here and designed for building wealth in reset times, and this is what we are discussing regularly inside our forums and our marketplaces. And if you wish to become part of that, book a call, go to www.themarketsniper.com and enjoy. Okay, we'll catch you again soon. Thank you for watching.